Valley Mole.
Hi, I'm David Smith and this is Valley Mole, the show that digs in and around Silicon Valley, searching for insights into technology news stories, the patent wars, and the business of startups. Microsoft has teamed up with Silver Lake Partners this week to prepare a bid to acquire Yahoo. Yahoo is on the auction block following Jack Ma's visit from China, where the Alibaba founder says he's prepared a $20 million pile of cash to acquire Yahoo. And Microsoft has now entered the fray with Silver Lake, the private equity group. They're using finance also that's coming from the Canada pension plan through the Silver Lake private equity fund. Now, these three actually joined forces in the acquisition of Skype. Microsoft recently bought Skype from Silver Lake, and they paid something like $8.5 billion for Skype from the private equity fund. Silver Lake and CPP, the Canadian pension plan, had bought Skype in 2009 for $1.9 billion. And they sold it in 2011 for $8.5 billion. So this is a nice profit, and this is exactly what these private equity groups set out to do. They buy underperforming assets, they make them perform, and then they sell them at a profit. Now, Silver Lake raises its finance from large holders of cash like CPP. CPP then pay them, their own investors pay them a management fee. It may be something like 2% of the total fund per year. And they pay them a share of the profits that are made on the fund. Often it's 20%, a 20% carry that then goes to the partners that are managing the private equity fund. Now, these private equity funds, like Silver Lake, have huge checkbooks. In fact, the overhang, according to PitchBook, the market research organization, the overhang of cash that's held by private equity groups is in excess of $490 billion. So they have, at the end of 2010, they had more than $490 billion that they had in equity that was unspent. Now, they can also leverage that by raising debt financing on the top of that. So these guys have huge checkbooks. Not only are they spending $490 billion of their own finance, or the finance that they've already raised, but they can raise further finance and double that up. There may be $1 trillion of finance available for corporate acquisitions by private equity groups today. One of the things this means is that the mergers and acquisitions deals are seeing a lot of private equity bidders. For every strategic company like Microsoft that's bidding, there's typically 3 or 4 private equity bidders in each deal today, which is a difference from what it used to be years ago, when the only large acquirers of high-tech companies were typically operating companies like Microsoft. Now, we've seen a decline in recent years of the IPO market as an exit for startup companies. IPOs have declined in the US really from the dot-com crash and the introduction of the Sarbanes-Oxley regulation. You've seen a huge decline in the numbers of IPOs and the amount of finance raised on the public markets from IPOs from startup companies. So these private equity acquisitions represent an exit for startup companies. But typically they have to be successful, they have to be profitable. They're not buying small startup companies. Typically they're looking for companies with $5 million or more in EBITDA in profits before they become candidates for acquisition by a private equity fund. But private equity has stepped in where IPOs kind of left off and are providing an exit route for startup companies. So it's not unusual these days to see private equity bidding to acquire companies like Yahoo. We don't know if Yahoo will be sold to a private equity group that's partnering with Microsoft, or whether they'll be sold to Alibaba and Jack Ma or someone else. But these private equity buyers are providing liquidity and exits for Silicon Valley startups today. We'd like to thank the sponsors of Valley Mole. Tynex, the full-service patent broker, operating the world's largest patent and technology trading exchange. Silicon Valley Business School, offering unique educational programs and materials to students and teachers of entrepreneurship and technology commercialization. And ValueMyPatent.com, the only place to go for rapid, realistic patent appraisals.